Okay, so I just wanted to talk to you about week 7 because it's going to be different than the other weeks. We kind of have our standard routine where we've got the discussion, the vocab, the My Accounting Lab, and then an Excel assignment, maybe a quiz or an exam. So week 7, we're going to do a little different because we're going to do a couple other assignments. I am not going to have us do a discussion of week 5, and we're not going to do Chapter 5 vocab to allow you time for the other tasks. In Chapter 5, you're learning about a merchandiser, and a merchandiser's income statement is going to be a little bit more involved because now we need to deal with the cost of the merchandise that we purchased. And so our income statement is going to be the multiple step income statement. So when you're reading Chapter 5, focus on that. You'll see the transactions described for a merchandiser. We will not be covering any of the discounts, so the sales discounts, the purchases discounts, and we will not be dealing with sales returns. So when we return merchandise to our vendor, we will not be looking at that because that gets a little bit complicated with some of the new revenue recognition rules. So the chapter itself, since we're not covering everything, is a little bit lighter. The My Accounting Lab is going to be shorter than normal because you've got 2 other assignments that you're going to be working on. So if you look here on the week 7 tasks, there is a week 7 My Accounting Lab assignment, right? You'll notice there's no discussion post, there's no vocab assignment, because then you're going to complete a financial analysis project. So you can click to access the project. Hold on, wait. Sorry, I had to switch to student view. So this is what you'll get when you click on it. So this assignment's worth 260 points, so it's a good way to get, make up some points if you've had some lower scores. And you can click here, and you can see the rubric you're going to be that's going to be used to grade your assignment. And you will be calculating 9 ratios using the financial statements for Pepsi and Coke. Basically, what you're going to be doing is you're going to be analyzing the Pepsi company's financial statements and the Coca-Cola financial statements. You're going to be looking at 2 competitors. So that's why you can kind of compare how they're both doing. And we're going to be looking at how the companies are doing in the area of if they're able to pay their current liabilities, if they're able to pay their long-term debt, evaluate their profitability, and then the stock, how the stock is doing as an investment. How do stock analysts view your company as an investment for buying stock? And so when you look at a company's financial statements, we know that the income statement, is going to show you the net income. We know the statement of retained earnings shows you how retained earnings change during the period. We know the balance sheet shows the financial position of the company by showing you the accounting equation, the assets equaling the liabilities plus equity. But there's more information you can get by calculating a series of ratios. And so I have here the 9 ratios. Working capital and profit margin percentage are not in the textbook, but I have linked you to an explanation. All the rest of them are discussed in various chapters in the book. So you can go to the chapter in the book and you can find at the end of the chapter, there's a section called How Do We Use Whatever the Ratio Is to Evaluate Business Performance. I've also linked you to 9 short videos that are maybe like a couple minutes long. You can watch all the videos in about a half hour. And so you're going to use these to calculate these ratios. Now, I've also linked you to a PowerPoint that will give you the formulas for the ratios and a little bit of an explanation about them. You will then go, and here's a template that you can pull up. And in the template, I've given you all of the formulas for the ratio, so it'll be a matter of going to Pepsi's balance sheet, getting the current assets and the current liabilities, and then subtracting to get the difference. The current ratio you'll take those same current assets and current liabilities, divide them, and get the ratio. Okay? So these 9 calculations, each one, will only take you a couple of minutes to do. So you've got 18 in total for 9 for each company. So 18 ratios. Again, this you should be able to get done in an hour. But the most important part of this assignment is going to be the analysis. And so you're going to answer 4 questions about your ratios, right? So we've got the 3 ratios that tell you about your ability to pay current liabilities. And then you're going to then do a write-up and interpret how well Pepsi and how well Coke is able to pay their current liabilities. So it says support your answer with an interpretation of your calculations. Don't just tell me, well, Pepsi's is higher than Coke's. What does that mean if the current ratio is higher than Coke's, right? What does it mean if the quick ratio or acid test ratio? What does it tell you about Pepsi? Okay, so for instance, the current ratio tells you how many times a company's current assets can cover its current liabilities, right? Because you're going to use your current assets to pay off your current liabilities. And so that's an important thing that a creditor, especially a short-term creditor, is going to look at to see if you're going to be able to pay your bills. So you're going to have to do a little bit of work reading about these ratios, what they mean, how they're calculated, do the calculations, and then you're going to answer these questions. The other assignment that you have is this business scenario case study. So if you click here, you can access that assignment. And here it tells you that Hellas Inc.'s operating income is going to be lower than the target operating income that the investors are expecting. And so if a company doesn't meet the expectations, stock price is going to drop. And so companies really don't want to miss the targeted operating income. So they've called a meeting here in December and they're saying, hey, what can we do to get operating income up to target by year end? And so the accounting supervisor makes a suggestion saying that since the terms of sale are FOB shipping point, all orders received in December must be shipped before midnight on December 31st, even if it requires all shifts to work overtime. So when you do your reading in Chapter 5, you're going to see what it means to have the term of sale FOB shipping point and when revenue is recognized, when is the sale final if it's FOB shipping point. Why is he wanting them to be shipped before December 31st? And then you're going to answer these questions. Explain how this suggestion by the accounting supervisor will affect operating income. And I want you to discuss specifically what will change on the income statement if they go with this plan. So discuss the timing of revenue recognition when the terms of sale are FOB shipping point. And how will operations be affected? So what will they have to accomplish in this little last week of December? How will things be different if they go with this plan? Also, how will next period's operating income be affected if they go with this plan? And then think about your own suggestions. If you were on that team, what would be your suggestions for improving operating income for the fiscal year? And then go with your overall, which course of action do you recommend for the company? So this should be should take you about a 1-page document, Word document to answer all these questions. And then again, I have provided the rubric to see how that this is going to be graded. Okay. So I just wanted to share this with you so that you had an idea, since we do have a different week. Obviously, if you have any questions, shoot me an email. If you are not understanding something and you want to hold a video conference to go over it, or just talk to me by phone during my office hours, I'd be happy to do that. You just need to reach out to me.